Hey everyone, welcome to the YouTube edition of my podcast. Been doing it for a few weeks now. It's pretty much going to be exactly what you'd get on the other kind of podcasting platforms where you listen to it, but you get to see my face as I talk. One thing I want to say though is there are going to be some segments in today's show that I have covered as separate videos in the last week. So don't worry, there's going to be chapter headings so you can skip forward, jump through to the bits that you don't know that are new to you, or you can just listen through and watch that stuff again. And at the end of the show, I'll do something a little bit extra just for you guys on YouTube. But let's get into it, shall we? Welcome to Cash Chats with me, Andy Webb from BeCleverWithYourCash.com. This is the podcast to help you make the most of your money. Now, for the 345, I'll be taking you through Talk Money Week and the one thing I think you should be doing. I'll be giving you an update to the base rate of interest as set by the Bank of England last week. I'll be taking you through why I'm changing up Secret Santa this year, so the thought really does count. And as ever, I have my deals of the week, including a new bank switching deal from Barclays. So make sure you stay tuned for all of that. But let's waste no more time. Get straight into it. This is episode 345 of Cash Chats. So this week is Talk Money Week. And this is set up by the Money and Pension Service. So years ago, it used to be called the Money Advice Service. I actually used to work with them back in the day, running their website, running their blog. But this is a campaign every year that runs around this time, Talk Money Week. The idea of getting us to have conversations about money, which is a really good thing, something I can get behind, particularly with a podcast called Cash Chats. And the theme this year is one thing. And the idea is to make you, what's the one thing that you maybe should be doing, you should be talking about? And I had to go, well, what would that be? What do I think the one thing you should talk about is? Instinctively, the one thing I think you should do in Talk Money Week is talk about money. But I did cover that in a lot of detail in episode 306, particularly when it comes to relationships. So I encourage you to check that one out, episode 306, particularly because I know a lot of you are going to already be quite clued up with your finances, and you may well be the one in the relationship who's doing all the money things. And that can be quite dangerous if you don't have conversations about it. But I won't do that now because I've covered that before earlier this year. The other thing is, obviously, the one thing I think you should guys do is to switch your bank or move your savings. Again, I talk about that all the time, so I don't want to do that. And I think actually what I want to talk about is think about who are you? Who are the guys listening to this right now? And you are, on the whole, you're quite engaged in personal finance. You're quite engaged in this world of money saving. You want to get the best deal. You listen to me every week. You watch the YouTube channel. You read my website. All these things. So a lot of that stuff you know about already. But there's something which might be more attuned to you guys that you might not be thinking about. It might be not something you're aware of. And I'm going to just take you through what I think is one thing you should do. And the one thing I think you should do for Talk Money Week, and maybe not just this week, but going forward, is to maybe do a little bit less. If you are an ardent money saver like me, it can sometimes take over a little bit and sometimes be a bit too much. I'll give you an example. So in the past, I have spent hours, and I mean hours, looking at the reviews on Which for a new toaster or a new kettle, just to find out, comparing the different ones, trying to work out which one will be the best value for money. But we're talking about something which costs, well, you obviously can buy really expensive ones. I'm never going to do that. But, 50 quid maybe, because, a little bit nicer than the basic ones. But again, so much time looking at them when really actually a quick glance, a quick check that something does get really poor reviews. Look at the ones that all cost the same, all look roughly the same, and then plumping for it would have been a much, much more beneficial thing to do. I've been known in the past, I've got a lot better at this over the years, but I've been known in the past to go out of my way to take advantage of an offer at a supermarket where really you save, 50p on something. Recent example, I still do this a little bit. I shared was it last week or the week before, I shared about an offer at Asda for chocolate oranges, which were £1.50, but you could get 75p back, and actually some other offers that were running with Asda Rewards at the time meant I got them for free, which is great, right? Who doesn't want a free chocolate orange? In fact, I got about 6 of them. But who doesn't want that? However, it was kind of on my way, right? I went maybe an extra 15 minutes, an extra 7 minutes that way, 7 minutes back when I was kind of at that way of town. But really, for the sake of £6 and some chocolate oranges, did I need to do that? Probably not. There's so many more examples. Chatting with the team, every week we talk about the stories and the deals that we're going to cover over on Be Clever With Your Cash. And we were talking just earlier today about a new thing that's come from Nectar. And Nectar are doing this thing right now for Christmas points, and you have to earn a certain number of points to get some bonus points. And it looks quite enticing at first glance. And, I think it varies by every individual. So you might have a different offer on your Nectar app, but earn 300 points and get 1,000 Nectar points. That sounds pretty good, doesn't it? But to earn 300 Nectar points, you've got to spend £300, more or less. Normally it's 1 point for every pound you spend. So 300 quid you've got to spend. And then 1,000 Nectar points is, broadly speaking, if you do the normal redemption, there's very few ways to kind of boost this. 1,000 Nectar points is worth a £5. So it sounds, maybe I'll go to Sainsbury's to get those extra points. But that's sort of taking you out of the way. I'm onto Nectar. I know this isn't a great deal, but I wouldn't go out of my way just to go to a Sainsbury's to spend £300 cumulatively, maybe over time, just to get a £5. But I have done it in the past. It's the kind of thing that would have made me think, I make sure I do this so that. All these things that you can do. And you can take it again. I tell you, and I have told you this before, and I've kind of got better at this myself, but I tell you about all the best savings rates, and we will touch on that a little bit when we talk about Bank of England rates in a moment. I'll tell you about the best rates and how it's important to move your savings to get that best rate. But it does depend on how much money you've got saved and what the difference in the rate is. If you don't have much money, then getting an extra 0.5% isn't going to make any difference at all. It really isn't. And if you have got even a large amount of money, but moving it for 0.1% extra isn't going to make such a change that is worth the time and the admin effort of doing that and continuously doing it. It's about doing it maybe, at a more measured pace, but doing it all the time and really being kind of fixated on it, which is easy to do if you're really passionate. I know so many of you are, but the people who join me on the YouTube lives every couple of weeks, you're really kind of often like, should I go for this? Should I go for that? And sometimes it's too much. Another example, again, we're taking things too far. A lot of these banking offers, I've been saying to you guys, I tell you about them, I say how to do them, but often say that I'm not going to bother doing it because it's too much effort. A lot of it's these ones where you've got to spend, use your debit card 30 times in a month, and in return you'll get your £1.20 or something. I think that's how the Co-op one, something like that. Again, in the past, I would have gone for that. But now, it's not worth my time. So my one thing to you guys, for those of you who are really into these deals, these offers, the money savings, to making your money go as far as it can, is to actually step back a little bit and find out if you're maybe a little bit too obsessed with it, if that's okay to say that. If you're a little bit kind of taking these things maybe too far, and think about actually the reward, time versus reward, how important it is to actually think about how you're using your time the best it can be. And it could be that there's something you can do that is money-based, which has a better return, a better reward, and takes the same amount of time as all these little things. Or it could be something else, life admin-wise, which is easy to ignore and forget about. It could just be relaxing, chilling out, having some time for yourself. So, have a think. Prioritize. I absolutely do still believe that the little things add up and can make a big, big difference. But I also think you've got to kind of think about it in a wider context, of how much difference it's actually going to make to your life to continuously do this stuff. And it can be exhausting as well. If you're sitting there listening to this and you're finding yourself getting worn out trying to be on top of all the deals, it is really exhausting. And that you're better off just picking and choosing. So that's my one thing to do, Talk Money Week, for those of you who are super fans. But I would remind you again to please listen to episode 306 of Cash Chats, if you haven't already, from earlier this year, where I do talk about the importance of having proper conversations about money in a relationship as well, and having sharing that. So please do check that one out as well if you haven't already. Next up, what we're going to talk about, let's talk about the Bank of England. So the interest rate decision took place last week. I'm sure many of you are already across this. I did do an article and a video on Thursday when it was announced. The decision this time was to keep the rate at the same level, 5.25%. So that happened last time as well. So the last 2 meetings in a row, there has been no move. And that followed, obviously, that, was it 14 or 15 consecutive increases before that, which started nearly 2 years ago in December of 2021. So what does that mean? Rates have paused. They did not go up. Does that mean they're going to start coming down? Does that mean they've peaked? Well, in the documentation that the Bank of England released at the time of the announcement, they kind of talk about where they think things are going, and not just the base rate, but also inflation. And they are kind of tied together. The reason we've had all these base rate increases over the last 2 years is because inflation has been high. And the way to try and tackle inflation, to bring it back down to a target level of 2%, that's what the Bank of England wanted to be, 2%, is to increase interest rates. The theory behind this is that as interest rates go up, you either have less money to spend because your mortgage has got more expensive, or your debts have got more expensive, so you can't go out and spend money elsewhere. Or savings rates have improved, so instead rather than spend money, I'm going to save it and get some interest on there. And that means less money is going into the economy, and that means businesses have to, in theory again, reduce prices, or at least slow down the rate at which prices go up in order to kind of bring things down. So that would hopefully lower that inflation rate. It's not deflation. Deflation is where prices actually would reduce. It's about as the prices not increasing at that kind of super fast speed that we've seen. So that's why we've had the inflation's been really high, and we've seen interest rates get high to try and tackle that. They feel at the moment, and these things are always changing, they feel at the moment that the rates have gone up enough to make that come into effect. So inflation has already been falling. The rate of inflation is now at 6.7%. So obviously we were in double digits not too long ago. Still a long way off that 2%. But it takes time for this to come through. Hey, 2 years of increases has shown that. So the current thinking of the Bank of England is, let's wait and see. If this is working and inflation does start to drop down, they think we actually might get inflation down to 4.8%, the next figures, which we'll get probably in a week or so. And then by the end of this year, it could sort of drop down even more below that, so around 4.5% by the end of this year. So still well above that target of 2%. And then in maybe a year's time, maybe it's 3%. And by the end of 2025, so 2 years' time, 2 and a bit years' time actually, maybe we'll get to that 2% level. So this is not going to be straight away. It will take some time to get there. But if it does happen, the bank think that it doesn't mean that we're on a course for this to happen. We've done the job and rates can start to come down, interest rates. They think interest rates will stay at around this level for another year, easily. Potentially then, so let's say we're down to start reducing it in this time next year, maybe earlier. You never know, could be in the summer, but in the autumn, coming down a little bit. Still going to remain pretty high for another few years after that. In 3 years' time, in fact, the current predictions have the base rate of interest at around 4.25%. So what this means is, if this is the case, and again, things can change all the time. We know all that uncertainty now in the Middle East because of what's going on in Israel and Gaza. That can have consequences that could go on for a long time. We know how much the Russian invasion of Ukraine impacted oil prices, which also led to so much inflation. Obviously, there's other things going on as well. But this could mess things up again. But at the moment, current predictions are all of that will happen, but rates are not going to be dropping anytime soon. The base rate is likely to stay where it is and then drop a little bit. So we were staying at these, for recent times, quite high rates for a long time. I know historically you can go back into the 80s and the 90s where rates were a lot higher. Hopefully we won't be going anywhere there. We might have peaked in terms of increases, but we certainly won't be looking at going back down to those really low rates we had, particularly around the pandemic, the start of the pandemic. And very quickly, what does this mean? Savings-wise, and I touched this last Thursday, but things have already moved on since then. I would have, fixed rates have been falling for a while now, because with this kind of, the last few increases have been the last few decisions of saying that the base rate is not likely to go up. It's been paused. They don't think it will go up. And now they're saying, well, stay where it is and then go down. So there's no real reason for the banks to give you rates above this. And there are some that are above it right now. But the longer we go, the more they're starting to go down. And we're starting to see them really drop down. it's now very, 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 very difficult to find any fixed rates above 6%. There are a couple around 1 year, but broadly speaking, they're all lower. And in fact, just on Friday at the end of the day, the highest 3, 4, and 5 year fixes, they all dropped down. And then below them, there's some quite big dips below that. So if you haven't already, if you have money which can be locked away and you haven't already done that, then absolutely try and get some of these rates now. Yes, things could change and the world situation could change, our economic situation could change, and they start increasing rates and maybe fixes go up again. So you might want to kind of balance things out a little bit if you're uncertain about that or you're not sure about that. And maybe you can have some of your money fixed for 1 year, some for 2 years, some for 3 years. And that would give you the ability to, so let's say your 1 year fixed matures in a year and rates have gone up, well, then you can invest that money at a higher rate. But if in a year's time rates have gone down, well, at least some of your money is in a 2 year and a 3 year fix. You're kind of balancing out the risk a little bit. So that's worth considering there. Just do remember with your fixes, that money is locked away. You can't access it in that time. And also checking how that interest is paid, or when it is paid really. If it is paid monthly and you can access it monthly or even annually, it will count for your personal savings allowance for the year that it is received. If it is paid at, also known at maturity, then you won't be able to get it all paid at once at the end. So if a 2 year, 3 year, 4 year fix, that's a lot of interest potentially coming, depending on how much you've saved, a lot of interest coming all at once. And that could, at these still decent rates right now, could easily eat into your personal savings allowance. So bear that stuff in mind. What's interesting as well, this is on my video on Thursday when I spoke about this, I kind of felt that hopefully those best easy access rates would stay where they are because they'll be moving up. They're pretty good rates. They're still lower than the base rate, but stay where they are. Actually, over the last few days, some of those top ones have been pulled. So we had a limited access one at 5.25%. That got reduced down to about 5.15%. So still decent, but not as high as it was. We've seen an easy access at 5.11 has been withdrawn. An easy access at 5.2 has been withdrawn. Now, they haven't reduced the rates for existing customers, but they have withdrawn them for new customers. So it's certainly worth thinking about. Again, if you haven't or you've been wishy-washy about it, thinking about it, which one do I go for? Now is maybe time to try and get some of those rates. Bear in mind, most easy access ones are variable, so they could reduce the rates. But at least if you've got them now, then at least you get it for a duration at least. But going back to what I was talking about just a moment ago in terms of not moving too much, I'm thinking here like if you are getting less than 4.7 and you can currently get 5.2 or there and thereabouts, then it's worth doing it. Definitely worth moving it along. If you're currently getting 5%, I'd be happy with that more or less, rather than moving up to that 5.2, unless you've got a lot of money saved up and it can make a big difference to your returns over a year. So that's savings, and I will do, probably going to do a video on Wednesday evening with a quick look at the whole market. So that'll be on my YouTube channel and also an article over on becleveryourcash.com with more updates on where savings are as the start of November. When it comes to borrowing, important here just to quickly talk here about mortgages and what that means. Rates obviously were a year ago sky high with the whole Liz Truss nightmare, the whole fiasco there. And since then they have been sort of, even though the base rate has been going up, there's been a kind of a bit more of equaling out, and they are starting to come down still, these mortgage rates generally, particularly with these last two pauses on the base rate and these predictions now unlikely to go up again. We might see them to come down a bit more as well, but it's not guaranteed. And it's hard to kind of know for certain what you should be doing. If you're on a variable rate right now, or you've got a fix that's coming to an end, it's hard to say that the rate right now is going to be any better or worse than a rate in a month's time, 2 months' time, whatever it might be. But what you should do really here, my recommendation here, is to speak to a mortgage broker, mortgage advisor, get their thoughts on things. They'll know this industry much, much better than anyone else. Of course, they won't know what could happen because no one does know. Things can change. But they certainly should have some sort of guidance and understanding of where things hopefully could be moving, and also better guidance on certain products, which give you a bit more flexibility. Because in theory, you can lock in for 6 months ahead on a mortgage deal, whether a new mortgage or a remortgage. You're locking in for 6 months. And if then you take that fix when your current mortgage deal expires, you take that deal. If for some reason rates have got better, they've got lower, then you can scrap that and take out a new one instead. So yeah, look for one of those, get your mortgage advisor or broker to suggest one that might work in that thing, because you want to make sure there are no penalties if you were to change your mind. But again, that gives you that flexibility to hopefully get the best deal right now in case rates go up, but change to a better deal if when you need it, rates have gone down. Good news, I suppose, in terms of the fix, the base rate not going up, is that, there haven't been extra increases for those people on variable or tracker rate mortgages this month. But they aren't going to go back. So same with savings. They aren't going to drop back to those really low rates anytime soon, if ever, or at least not in the short to medium term. So they are still going to be so much more expensive than what you were used to. Average rates were still around that sort of 5 to 6% for so many of these fixes compared to just a few years ago when they were under sort of 2% on a lot of them. That's the base rate. Next meeting is in sort of 5.5 weeks' time. I'll let you know, obviously, here on the podcast, on the YouTube channel, and on the website on becleveryourcash.com, what happens then and what that might mean with the latest predictions. So the last thing to talk about before we get into the deals of the week is Secret Santa. Now, Secret Santa is something which you might think, hang on, Andy, why are you talking about Secret Santa now? We've just had Halloween. We've just had Bonfire Night. It's still a bit early. And it is a bit. I did talk about Christmas, getting ready for Christmas. When was it on the podcast? A few weeks ago now, episode 341. And that felt early, but it was important to start talking about and thinking about your Christmas spending, I think in September, October time. And now we're in November. Things are kind of ramping up a little bit. And we will be very, very, very soon, I'm sure, in your workplace or with your friends. I've already had it, from the in-laws asking me, and my mum as well, and my dad as well, what do I want for Christmas? What do you want? And people will start thinking about this. So this is kind of the time that we've decided to launch a campaign. This is Be Clever Your Cash alongside UK Money Bloggers, which is a community that is set up for all kind of finance content creators, got about 8-9 years ago now. And also with Smart Money People, which is kind of the part of the partner group that Be Clever Your Cash are part of as well. We're all behind this big campaign called Give or Gift. And this links into Secret Santa. So we'll kind of launch it now, and I want you guys to know about it. And hopefully you can encourage your workplace colleagues to take part. You can encourage your friends and families to take part as well. But let's go back a little bit. Why Secret Santa? So you might love Secret Santa. And as a money saver, the idea of Secret Santa is fantastic. It ticks so many boxes, doesn't it? You have a price limit, okay? So you can't get caught up in spending more money than you can afford, or actually think, that's a great gift, so I'll buy that. And all these things kind of mount up together. So from that point of view, it is absolutely fantastic for money saving. It also, you buy one present rather than lots of presents. So again, everyone gets something, everyone takes part, you show the love and the appreciation without, again, having to overspend or do that horrible thing of gifting for the sake of gifting, because you do it every single year. You're reducing that happening. So this is, a good things when it comes to Secret Santa. There are lots of positives behind it. The problem is not in the theory, it's in the practice. And I often find it doesn't really kind of work like that, does it? Particularly when it comes to the workplace. The amount of times I've taken part and I've been given something which has had clearly no thought has gone into it, or if the thought has gone into it, it's maybe been a little bit misjudged, or, it's just, a bit awkward, a little bit difficult, isn't it? Or, flip side is you've picked the name out of a hat of someone you really don't know at all, and it's Secret Santa. You can't sort of go and ask them what they want, so you've got to guess, and that's, I think, where these kind of tokenistic or novelty, gifts or ill-advised gifts often come about. I mean, there's a whole industry out there which I think is just designed for Secret Santa. All those kind of, you walk into like Urban Outfitters or some sort of stationery things, and there's the mugs and the books and the things, like, no one really wants this stuff. And it just gets, a lot of these gifts, they're given, they're received, and then they're never looked at. They're given, hopefully, to someone who might want them, but more likely than that, they're in the bin, they're never used, they're thrown away. So I have issues with this. So this is where this idea of give or gift comes into play. What we're doing is giving you, as the Secret Santa organizer, the opportunity to let people decide if they want a gift. Do they actually want the Secret Santa to be given something which ultimately might end up in the bin? Or would they instead like you to give to charity on their behalf? That's the idea. give to charity or receive a gift. Now, it is absolutely fine to tick the box that says gift. And if you're doing this with friends who know each other well, then that can be really still a really, really good way to celebrate Christmas. And I say a really good money-saving way. But if you're doing it with colleagues and you're not that bothered about it and you find it a little bit awkward and really you don't need anything, that much, and you would like to support people who maybe need it more than you at this time, then that, I think, this idea of giving to charity is a really great alternative. So how do you do this? Well, there are a number of ways to do it. We've got over at ukmoneybloggers.com/give or gift. You'll find a whole list of kind of useful information about how to do it. You'll find a sign-up sheet that you can print it out and, again, cut the bits of paper out, write your name in, tick give or tick gift, put it in a little hat and pick it out as you normally would Secret Santa. All those things there, some posters if you want to put them around the workplace, encourage people, talk to those people to take part, all that information there. So ukmoneybloggers.com/give or gift, more resources. But you also, what's important to know here is if you do choose give, you want someone to give on your behalf as, if they're your Secret Santa, you can choose a charity of your choice, obviously. But we have partnered this year with a charity called Kids Out. And they do some fantastic things in terms of looking after and giving gifts effectively to children who are currently in women's aid refuges who have escaped domestic violence. So emotional, physical abuse, things like that. They've often come from their homes with just a clothes on their back. All their toys have been left. They and their mothers have had to just leave at a moment's notice and just get out when they can. So they're in this place that they, is different to them. It's not their home. They haven't got their stuff with them. And this charity do some amazing things. And particularly as we go into Christmas, they will buy them toys. So actually they will still have to be able to have some element of Christmas themselves. And that's where kind of that, our chosen partner is. There are information on that again at the UK Money Bloggers website and how you can go to our Just Giving page, or I will link that into the show notes for today's show as well. But again, that is and it's written on all those printouts I said about where you can put your name and whether you'll give or gift. You've also got the Just Giving URL there. But I think this is hopefully something which can make a big difference. We did some research for this as well about Secret Santa itself, and it was about, let me get this right here. In workplace Secret Santas this year, it's estimated £167 million will be spent on that present exchange this year. Okay, £167 million just in the workplace. Okay, and a third of people taking part say that present ends up in the bin, unwanted. So that's £60 million of cash potentially. If everyone who took part, who didn't want the gift they received, instead actually had a donation on their behalf instead, that's a huge amount of cash, huge amount of money that could go to good causes. So really, really, really hope you will support us in this. If you like the idea of it, talk to your friends, talk to your colleagues. Again, doing this in early November because it can take a bit of we'll just drop it on someone when they can't and start doing it. Is get the people who do this in the office, whoever it is, get them on board early so they can be part of it. And again, really important to reiterate though, it is a choice and there is absolutely nothing wrong with ticking gift. If you like what you get on Secret Santa every year, one year I got a yard of Jaffa cakes, which was amazing, then go for it. But if you want to say, if it's just about taking part, it's about, the thought of doing it, well, make that thought really count. That is it for the main chunk of the episode. I'll be back in a moment with my deals of a week, including that Barclays switching offer. Right, guys, thank you so much. I'm not doing a listener's question today. That's because last night on the YouTube channel and the Instagram channel, I did a whole live Q&A for 30 minutes. I do this every couple of weeks. We have also started, it's available to rewatch over on the YouTube channel if you wish. We've also now got it listed as an extra podcast if you're listening on YouTube Music. We're not dropping it with a normal podcast feed, but you can listen back to that. Always some great questions there. If you missed that, obviously make sure you follow us on YouTube or on Instagram so you can take part next time. But I always let you know when these are happening in our weekly newsletter. BeCleverWithYourCash.com/newsletter. Sign up for that every Thursday morning. You'll get the best of all the content we provide, plus the date of when that next live is going to be. And of course, there is our Facebook group, which is getting bigger and bigger all the time. I think we're on 7,300 now, maybe even 7,400 members. Absolutely fantastic. Love having you guys there. Such an amazing resource. So much information that you guys are sharing with us. And it's also a great place to ask a question during the week. The short URL for that is becleverwithyourcash.com/community. Right, let's do deals of the week, shall we? Couple of small ones to tell you about, and then I'll tell you about that Barclays switch deal. So first of all, this is around some credit cards. Credit cards, as I always tell you guys, they can be great ways to earn some money if they are reward credit cards and you pay them off completely every single month so you don't get charged interest. Really, really vital, that part there. But where they often come in even better are the welcome bonuses. And when these come along, a few weeks ago, I shared some really massive ones that are going on right now with American Express. There are some smaller ones right now, but they're certainly worth considering if you fancy a little bit extra. One of them is the John Lewis Partnership Credit Card, and the other one is the Asda Rewards Credit Card. If you are a new customer and you meet certain initial spending requirements, you can get some extra money. So the John Lewis and Partnership one, you have to spend 250 quid in the first, I think it's 90 days. You get £40 of John Lewis vouchers, which you use at John Lewis or Waitrose. So that's a nice, an increased reward that you wouldn't get as that much normally. That's a temporary boost. And the Asda one, these ones run from time to time. This one's via the Asda Rewards app. You'll find this. This is a £20 cash pot edition. So basically, you'll get it added to your Asda Reward cash pot. Again, if you spend a certain amount. So they're worth looking at. More information on those, and in fact, all the other deals I'm talking about right now at becleverwithyourcash.com/deals. A quick banking one for you. This is for a bank switch deal, actually. I've told you about it recently. It's the it's the Lloyds one. So many of these deals. It is the Club Lloyds switching deal that ends on the 14th of November. So you've got a week left, week and a day, in order to take advantage of this. It's £175, which is really good. What I wanted to give you a very, very brief update on this is that I told you before, the best thing to go for, in my opinion, as your lifestyle benefit that comes with a Club Lloyds account was the Disney Plus year, saving you a decent amount of cash. And I hope so many of you did this before the 1st of November, because on the 1st of November, Disney Plus changed their pricing and Club Lloyds changed the offering. What you now get for free is the Disney Plus with adverts for a year. There is no way once you've got it to upgrade it. So if you've already got it, that's not going to change. But if you open it up now, and then the last sort of week of the offer, that lifestyle benefit, I don't think is worth as much. I don't think it's worth necessarily getting, unless you don't mind having the ads. But maybe instead you want to look at the 6 free cinema tickets or the year's free magazine subscription. But it's important you know that has changed. If you're thinking, well, I need to do that before the deadline, the Disney Plus offer is still there, but it's nowhere near as good. And let's end up with this Barclays offer. Again, for those of you who are watching this podcast on YouTube, you may have seen a separate video that I did last week. But for those of you who are listening, just listening, this is probably the first time you're going to heard of this one. This is £175 from Barclays. And this is a really rare deal. It's very, very unusual for Barclays to do a switching offer. The last time they did anything, I think, was 2019. And then it was double Blue Reward points, bonuses. So it was worth maybe an extra 60 quid. Wasn't that amazing? This is hard cash, £175. And it's relatively easy to get. It's a little bit of a grey area in terms of who can get it if you're an ex-customer. But broadly speaking, if you have ever had a Barclays current account of any type, you shouldn't be able to get this. That's in terms of what the rules say. And I checked with the press office and they still weren't massively clear coming back to me on what it was. But yeah, if you've ever had a Barclays current account in the past, whether it's still open or you've closed it years ago, then you're not going to get it. But if you are brand new to Barclays and you've not had any current account with them, all you need to do is to apply via the app. Now, lots of you have had issues with the Barclays app in terms of doing this. It seems to be that maybe you need to do it in working hours in order to do this. But persist. Download the Barclays app. Open up, as a new user, open up a Barclays bank account, which is the rather sexy name of their standard current account, a Barclays bank account, or a Barclays Premier account. But the Premier account requires you to have quite a large salary, £75,000 a year, or have £100,000 in Barclays savings or investments. So for most of you, I think that's not going to be the one to do. So your Barclays bank account, and if you go down that route, you then, once the account is open, You also need to add on Barclays Blue Rewards. Again, it might take a day or two in order for you to add this on. Some people have found that they've had to wait for the application to catch up on itself before they can do that. Add on Blue Rewards. This in itself has its own conditions. This is £5 a month that you pay, but as long as you pay in £800 to that account every single month and have 2 direct debits in that account coming out, then you will get £5 reward. So that will even itself out. So it won't cost you anything, but you do have to make sure the money is in your account for it to come out. Okay, so it's really important, not just that £5 fee, but also those 2 direct debits. The £800 doesn't have to stay there. You can pay an £800 and, keep a tenner in to cover 2 direct debits and that 5 or whatever it might be. Do that. Do those things. Have the switch. Go through. The switch must be completed within 30 days. It must come from a different bank and it must have 2 active direct debits. Do all of that, and then within another, I think it's 28 working days, you will get that £175 added to your account. So the quickest I think this could happen is about 7 weeks. That's if you do the switch within 7 working days. If you do that switch a bit longer for the switching deal to go switch to complete, then maybe you're looking at a couple of months. So you might be able to get it just before Christmas. Realistically, I think you're looking at getting the money in January. This offer ends on the 30th of November. So that's the last date to start the switch process. So I wouldn't, often these deals can be pulled early, so I wouldn't mess around. But this is, for a lot of you, I think you're going to be new to this because it hasn't had any of these sort of switching cashes before. It's really only going to rule you out if you've had a Barclays deal in the past. Again, full analysis of this, much more detail, both an article on becleveryourcash.com and a video on the YouTube channel. That is it for this week. I'm a bit out of breath. I've done this in one take. I haven't made any edits at all. I will be back in another 7 days with another episode of Cash Chats. I hope this was useful. My name is Andy Webb. Until next time, cheers. Right, yeah, I really am out of breath for that. Talking constantly for half an hour is pretty hard. I will be back in a second. Give me a little bit of a breather and I'll give you a little bit of a YouTube extra just for you guys watching it here. Okay, here's that a little bit extra for those of you watching the podcast here on YouTube. And it is a listener's question. This one came in anonymously, but it is a question about ISAs. Can a stocks and shares ISA be transferred from an existing provider to a new provider, but as a cash ISA? So when it comes to any kind of ISA transfer, reiterate here how important it is to transfer your ISA over. That keeps it within that, what they use the term wrapper. I hate it, but that's the kind of word they use. The money is in an ISA over here, and you move it over to another ISA over here as part of something called a transfer. If you were to withdraw the cash out of this wrapper and it's just floating over here in a normal account, and then you paid it in to this other ISA over there, what you're doing is you're losing the protection it has within the ISA wrapper, and that is the allowance every single year of £20,000. Obviously, that can build up year after year after year. So let's say you've got £40,000 over here in ISAs built up over a number of years. If you withdrew all that money and paid it into the new one, the most you could put into that new one was £20,000. That's assuming, of course, you hadn't already paid into the ISA that year, which would reduce how much you can add that year. But a transfer, the full 40k could go over to that new one. So that's broadly why transfers are so important. I've spoken about it before, but it's really key to cover that again. Now, transferring into any type of new ISA is dependent on a new ISA provider allowing this. Not every single ISA will allow transfers in. And if you really want to have this new ISA because it's got an amazing rate or low fees, whatever it might be you can't do that. You can't transfer it over if they do not allow this. But assuming you find one that does allow it, you then need to have a look again and see if they allow only, if it's a new cash ISA, only allow cash to cash, or whether they can let you transfer it in from a stocks and shares one. Sadly, there's no hard and fast rule here. It is just going to be a case of looking at all those different providers. Hope that was useful. Hope you enjoyed the show. Remember, if you do want to listen to the podcast or any of the back episodes which aren't here on YouTube, just go to podfollow.com/cash chats. That will open it up in your podcasting app, or just search Cash Chats in Spotify, Apple Podcasts, any of those things, you name it, and you'll be able to listen back to many of those previous episodes. Cheers for watching, guys. Check out these videos here for more ways to help yourself with your money.